If you want to sell your business one day or scale it to a big exit, then it's really handy to know what the big buyers are looking for when they come to acquire your online business down the track somewhere. So today I thought, let's get a big buyer in on the Digital Investor podcast so we can learn off him directly. What does he look for when he's buying up online businesses? And in particular, in this day and age, interestingly enough, digital agencies, which are all the rage at the moment. So today I've invited along Dom Wells from Onfolio, which is a NASDAQ-listed company. You heard it, NASDAQ-listed, and guess what they do? They buy up online businesses. Really interestingly, and you'll hear part of Dom's story, Dom started out like you or most of our listeners many, many years ago, though, 2012, buying and selling websites. And he's progressed through to now buying and selling a portfolio of websites for a NASDAQ listed company. So he's publicly listed. So Dom, welcome. And thank you so much for your time today on the Digital Investors podcast.
Thank you. Yeah, it's good to be back. I think this is the third time we've had a nice conversation together. So looking forward to it.
Yeah, I was just about to say that. So if you haven't heard Dom before on the Digital Investors, make sure you go and check out the other interviews, because today what we do want to look at in particular, we're going to cover digital agencies, because in our communities, we know we have a lot of you are building digital agencies, and you've heard us talk about how they can be really effective for an exit. So Dom, what I want to talk to you about today is the sorts of things that makes a successful digital agency that you've seen, because you're acquiring so many, but also maybe mistakes. But firstly, what I did want to cover is we do need to recap your journey from, rolls off the tongue, doesn't it? Back in 2012, you discovered the online business space to today, mate, bit of a legend. You've kind of gone a bit bigger than most of us, which is you not only bought and sold online businesses, but you've started a publicly listed company doing that. So what was some of the intervening steps there?
Yeah, definitely didn't start out with that intention in mind. Was just looking to make an additional income online, and discovered internet marketing through, I think, 4-hour work week, and then reading and following my nose and stuff, like many people who get started this way. So the intervening steps, I think, so in 2012, when I first started, my model was really internet marketing via like affiliate marketing, really. And I think the first few websites I built were just Amazon affiliate sites. So it was all content websites. Pick a niche that I thought would do well, based on very rudimentary keyword research. Write some articles, nothing happened, and then learn about SEO and link building and about doing better keyword research and picking your niche better and so on. And then started making a little bit of money online, like I think $500 a month and then $1,000. And then I think it was right at the end of 2014, or it may have been end of 2013 going into 2014, I started a business called Human Proof Designs, which was, the idea was, I had seen on Flipper, there were a bunch of people selling, like back then Flipper was very different, but fundamentally the same, but I think the quality was worse of the stuff that was for sale. Well, you've seen that there's a demand for these turnkey businesses. Why don't you just, if you can offer better, why don't you offer better? So that's what Human Proof Designs was at first. We would research niches, package these done-for-you websites up where it was like, hey, this is a niche about, like pot plants, or this is a niche about pet food or something like that. And someone would come along and be like, okay, yeah, I like the sound of that, I'm going to buy it. And we did custom ones as well, where maybe somebody has their own idea about a niche, and then we would help them validate it and build it for them. And so that was really, without me thinking about it, that was really my first entrance into agency world as well, because it was more like a productized service than an agency. Agencies are typically more bespoke, and maybe they do more of the work for you. But it was the same kind of thing where you're paying a team to deliver a product for somebody else. And so I think did that for I sold that business in 2019, so it was about 4, 5, maybe 6 years of growing it, and I got it to about a million revenue, 1.1
Nice.
million, and this is US dollars per year,
Nice.
and the margins weren't great. I think we did about 200K profit a year, uh, but still, yeah, it was my first. Okay, this is successful. I can make money online full time. I can pay myself a decent salary, and I can dream about more. And maybe I dreamed a little bit too much, but
Sure.
uh,
It kind of looks
yeah,
like it because fast forward to today, you're sitting
yeah,
on you're the CEO and founder of a publicly listed company doing this.
yeah.
Like,
And now we've got 12 million revenue. So
whoa, nice.
small by publicly traded company standards, but compared to where I came from, it's pretty good. So the next real, just yeah. Did you have a question, or I'll just carry on filling
Well,
in the blanks?
uh, the obvious question is so far this is really cool, Dom. It's like a lot of our listeners, and you kind of you know our audience. You can imagine they're all on that same journey that you're on, and we've got people now doing digital agencies at a similar ARR, hitting seven figures a year. What what was the next steps? What made you want to go so big, publicly listed, to buy a portfolio of websites with Onfolio? How the hell did that come
Um,
about from being at that position where, you've got obviously got a lot of experience. What made you go to that next level?
I think there were a few things that happened at the same time, but I think in 2018,
Mm.
I felt like I was a bit unhappy with the business because our revenue was growing, but our profit wasn't necessarily growing. And instead of a team of like 3 people, I had a team of maybe 7 or 8 core people, and then a few contractors. And then I think we had something like 300 Upwork contracts open at one point of all these people that were doing like fulfillment
Okay.
for us. I got a
Yep.
Christmas card from Upwork one year anyway. That was
Yeah.
that was that
Okay.
was really cool. And I felt like I just felt burnt out. And also there were some months, you get a feast and famine with agencies. There
Yep.
were some months where we're halfway through the month and I'm like, I've got to make 45 grand to I've got to have 45 grand in the bank account at the end of the month just to pay people, and that's not paying myself. And like, where's all the sales? And then you panic and you do something and you grow the business, or you have a good blowout month or something and you make payroll. And so I was kind of sick of that. So part of me was thinking, okay, by many measures, I'm doing well. Like a lot of businesses fail, and I'm here with a successful business. I was looking for something more. And I went to this conference, and in the conference I was like, I felt like the sort of dumbest, least successful, poorest person there, that's a great conference to go to because it's
Yep.
inspirational. But
Yeah.
I what was interesting about this conference was, one, everyone there was really nice. It was highly curated. Everyone assumed that if you're going to this conference, you must be solid. So they make you feel like you can do anything. It's like, I imagine how professional athletes feel when they get a coach that like backs them, that kind of thing. Um, but also I was thinking, I really want more. Like a lot of these people, they sold businesses for 300 million, or they they had been hippies their whole life. They hadn't like sacrificed anything, but they were still super successful. And so I was like, man, I've been doing this all wrong. Like I've been busting my ass to just have $1 million in revenue when I could like there's like a whole other level, and I want it basically. And so um at the same time, I had recently done. I know you're familiar with Ryan Levesque. I don't know if everyone on
Yep.
your in your audience is, but he's got a book called The Ask Method, or actually his book's just called Ask, but it teaches you about asking your audience what their pain points are, and looking for gaps and new ways to innovate products so that you can scale to the next level. And I detected within my audience that there were people who were like, I don't want to buy a done for you website. I don't want to buy um, this brand new starter website. I actually want to buy a business that's already making money. Like I've got 100K to invest. I want to buy something that's making 4K a month or whatever. I think that's what roughly 100K could buy you back then. So if
Right.
you could teach me how to do that, I'd pay you. Or if you could help me do that, I'd pay you. And so I was kind of like thinking, no, I'd been doing a little bit of this myself as well. Like I think I bought a business for like 40K and um, I doubled it and I was thinking about selling it for 80K and I was just like, oh my God, this is amazing. And so I've been thinking, I want to do more of this. How can I do more of this? Maybe I can start a fund or something like that. And um, then I've been to this conference that had made me think I need to be doing something bigger and thinking bigger and everything. And then I had people saying, "Hey, I want to pay you to do something bigger." And so my brain was like, "Wait a second, maybe I should do this." And so I started on
Cool.
Folio, and I slowly worked towards selling human-proof designs. And I was correctly advised by a broker, start on Folio first because they're different businesses, but if you sell human-proof designs and then start on Folio, the buyer may be like, "Hey, what is this new thing you've started?" Um, Whereas I started it first, and then I was able to speak to the buyer saying, like, Onfolio is not going to encroach on human-proof designs, blah blah blah, and we were able to work it into the NDA and the non-compete and everything. So then I basically just jumped into Onfolio, and at the time, Onfolio was basically another agency. I
Right.
thought of myself as more uh, like a, like I was going to be a fund manager or something, but really we were just an agency where someone would come to me who was looking to buy a business like Off Flipper, Empire Flippers, FE International, something like that, and they would buy the business and own it, and I would help them find it. I would do due diligence. I would build a team, and my team would run the business for them, and we would charge them management fee and uh, profit share. And so that's what I did. Launched that business very early 2019. And throughout 2019, scaled it really well. And then at the end of 2019, I was like, actually, this kind of sucks again, which maybe it's just my personality. But I realized I think we were running about 30 businesses at the time, mostly content sites. And I felt like either we just accept that or we look for a better model. And so I started thinking about, well, what if all 30 people invested and they all owned like 1/30th of the same portfolio?
Cool.
Um, and so I looked at what people like you and Finzner was doing with
Yep.
Owl Mountain, and there were a few other people talking about it. Richard Pady was talking about sort of the portfolio side of it as well. And so it felt like, yeah, this is like the natural next step. And by this point, it's like early 2020. COVID, I think, was already here, but it kind of wasn't like it was right at the beginning of 2020, so no one knew what COVID was going to be, but it was here. Everyone was high off Trump's economy, which was really an acceleration of Obama's economy. So we had like 10 years of bull market, and people just, everything was about to become in a big bubble. But at the time, people were like, I need to deploy money somewhere else because, um, everything's inflated. And so there was just this whole coming together of everyone being like, online business is like the next emerging asset class. Um, People were like just throwing money at not just me,
They
but at
were.
the space.
Yeah.
And like Empire Flippers were making money hand over fist. Everybody was. And there'd also been a bit of a blow up with this other company whose name I forget, I probably shouldn't mention, but they'd ended up running a Ponzi. But they started out, I think, well intentioned. And so there was this kind of vacuum in the space where there wasn't really a big player who was buying businesses. And so I was thinking, okay, so we actually started on Folio as a holding company. Then we changed it. We raised about 1 million, about 800K, and we're like, right, let's go buy businesses, and maybe at some point we'll IPO. And so investors came in like, okay, cool, we'll back you. But then in 2020, everything accelerated even more so, and there were lots of micro cap companies going public. And some investment bankers were like, yeah, we could take you public on NASDAQ. You're not really ready for it, but raise a bit more money, get ready for it, get a board of directors, get a CFO, blah, 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 and then let's go. And we kind of were like, we went public August 2022. So this was a company that I started 3 years earlier, and we had 1 million revenue at the time. So we,
Wow.
to some extent, we had no right to go public, but also going public was a way to scale us because we raised 12 million in the IPO, 12.7, and that allowed us to make more acquisitions and build a team and sort of scale to where we are today.
Well done. Far out. So you'd only been going for a couple of years and then you're IPOing.
Yeah.
That's pretty impressive, Tom. Far out. Um, and,
During COVID as well.
and
Like we
during
did the
COVID, yeah, I know.
roadshow. I didn't set foot in America during the roadshow. I was in Taiwan, like
Yeah,
on
yeah. And
lockdown
you're
and
still
stuff. So
based in Taiwan, aren't you?
yeah, yeah, yeah.
Yeah. So you run on, so you're on the NASDAQ. So you're a tech
Correct. Yeah.
listed company in America, but you run it out of Taiwan.
Yeah. Well, I say I run it. I mean, I'm the CEO and the
You're the,
founder, so I run it. But like
yeah.
the business, because we're a holding company, there's lots of different businesses. They've all got their own teams, and most of the company and its infrastructure is in the US, and so it's
And,
yeah, it's just
and
me that's here.
was it pretty easy for you looking at buying a big portfolio of websites? So you're going from $1 million, you get publicly listed, you've got now $12.7 million. What was it like to deploy that capital? Was it pretty easy to find the deals that you wanted? And there's a lot to unpack here, I guess, but were you happy with the deals? What was it like to, I guess,
Uh,
in effect, spend that money?
we had a few deals lined up where we kind of once we IPO'd, we couldn't really agree anything because if we'd agreed something, that would have to go into the IPO prospectus. But we were like, yeah, if we get this IPO over the line, we're going to talk more seriously to these people. Um, so we actually made 3 acquisitions fairly quickly after the IPO. And then the next year, I think we only made 2 acquisitions, and the next year we only made 2 or 3. Part of the challenge we had was that actually 12 million that we raised in the IPO wasn't really enough because we were losing a lot of money because of being public, spending on investor relations, insurance.
Ah,
Our directors and officers insurance cost 360K in the first year. So we had a lot of, and now it's like 180 or something because the further away you get from the IPO and you grow your company and you have a less risky track record and so on, the price goes down. But we were burning money, so we were like, well, we need to acquire to reduce that burn, but at the same time, we want to hold on to the money because we need it. And so there was a balancing act between I kind of would be like, hey, we should just buy something for 12 million and then we're profitable. But at the same time, like that's a big bet to make. And
yeah,
obviously that's not a good strategy. But like that's like the most extreme example. Whereas the other example is let's not buy anything and we just burn through $12 million. And so we had to find the balance between let's acquire something for 2 million or 500K or 1.5 million and try to reduce the burn at the parent level and like yeah, like there's kind of like this thing where expenses were going down and revenues were going up and stuff, and we're kind of like just at that break even stage now.
well
So
done. Deploying that 12 mil, what price ranges of business you mentioned there, 500K to 2 mil? What size online businesses were you buying?
we were paying around 3 to 4 times EBITDA. So
Yep.
I think we bought 2 businesses worth about 4 million.
Oh, yeah.
We bought some worth 800K, some worth sort of between 1 and 2. We bought one for 600K, so kind of a wide range. Yeah.
Whole range. So the sorts of online businesses that you started buying, just after COVID and when you IPO'd, what what were they back then, and then what's it morphed to now? Because we'll look at what it's morphed into now. But what were you originally buying? Like were you buying e-commerce, a whole range, agencies, content sites?
Yeah, we kind of had a mixture of things. Before we went public, it was almost entirely content sites. I think
Okay.
like, when I
Yep.
was managing 30 businesses, it was mostly content sites. We did buy 1 or 2 agencies because we understood agencies because like Human Proof Designs and Onfolio were both essentially agencies.
Yep.
But we were kind of like, nah, agencies, no one likes agencies. Like, nah, So we had them there, but we were kind of like, they were good
Wow.
deals. And they were SEO agencies, so we understood
Right.
SEO as well. Um, we bought some WordPress plugins. We were thinking WordPress
Oh,
was
yeah.
a good way to buy SaaS businesses for cheap because WordPress isn't sexy, so you don't have
Yep.
to pay like 7 times revenue for a WordPress plugin.
Yep. Nice.
Um, that didn't really pan out because we didn't really find there was enough inventory. There weren't enough good WordPress plugins to buy to build a team around and to build
Mm.
a structure around. A lot of WordPress businesses, either they're free plugins or you just pay one time for the plugin. So it's not really a SaaS anyway. So we ended up divesting that and we moved away from the WordPress space. But I think you could build a small roll up in that space. We had a couple of marketplaces, we had some e-commerce, but by real businesses, we felt like, yeah, we could probably do a little roll up of agencies. That sounds good. And we also looked into just other, yeah, just other different businesses models and online courses we did well with, and we still like online courses. Yeah, like now we've focused a little bit more on agencies and so our last three acquisitions have been agencies, and maybe four of our last five acquisitions have been agencies. And the reason
Right.
for that is one, it was fairly opportunistic. So during 2023, 2024, agencies were some of the best businesses that you could acquire because
Yeah.
no one was buying them.
Yep.
So
Yeah.
we could pay less for them and we could
Yep.
structure. I don't know, agency owners in your audience might not want to hear that, but we could structure it in a way where we paid less cash up front. But also, we understood them. So we felt like the reason people are paying less for them is no one wants to buy agencies because no one wants to run agencies. No one, agencies are. So that was another reason we felt the prices were low. And for us, we felt, well, we know how to run agencies, we know how to improve their operations. Um, we're comfortable with a lot of the bad things about agencies or like the perceived bad things. And
Yep.
so we were like, yeah, let's start building a bit more of an agency portfolio.
So fast forwarding through to today, that's your main focus. You mentioned, out of your last five deals, four of them are agencies. What size agencies are you buying? Because we've got a wide range of people that listen to this. Some of them own small agencies, some of them do own bigger agencies. I would imagine some of our clients, if you're listening, may be in the sweet spot here. What size agencies are you generally buying?
So we've typically gone higher and higher as we can because there's two reasons. The first thought we had was an agency needs to be big enough to be able to pay for the salary of a team member,
Yep.
like a CEO, because normally the founder wants to leave. And so we thought, okay, so really it needs to have like 500K profit a year.
Mhm.
Otherwise,
Okay.
all that profit's going to be eaten by um, like someone else, coming in, like the CEO, CMO, that kind of thing. Um, and that's still true. But we've started to try and buy bigger, like 1 million revenue would profit would be even better. But typically, yeah, like 500 to 1 million. Now we, at the same time, our not our last acquisition, the one before that. I was going to say penultimate, but it's like not the anyway.
Yeah.
Um, our last but one acquisition was only doing 200K profit a year. We bought it for 600K. It was a little bit strategic, but also it was something we knew like another the teams we already had were capable of running it. So we thought, okay, yeah, like this could be a tuck in, or it could become a division of one of our existing agencies. And so if you're going to do that, then a smaller agency is okay. Whereas if you're trying to buy it as like a standalone thing, it needs to have enough meat on the bone. And then we'll probably go into this more now, but there's other things you have to look at an acquirer. It's not just about replacing the founder or the founding team. It's also about what's the revenue concentration like? Like is
Mhm.
80% of their revenue coming from one customer? Do they have a consistent pipeline of getting new deals? Do they have a sales process? Like, do they have a marketing process? Because the biggest thing with buying an agency is when you buy an agency and the founder leaves, the business often collapses. And so you need to have stuff being less reliant on the founder, unless you have a way that you can replace that or offset that. So typically, when you have all of those things in place, the business is just going to be bigger anyway. So that's kind of why we started to go higher, because we were like, we want all of these things in the business, like they don't exist in the smaller ones. That being said, if you have a pipeline or you have a sales system or you have someone with existing bandwidth who can do those things for a new acquisition, then yeah, maybe you can go a lot smaller and the opportunity could be larger there because maybe you don't have to pay as much, so there's more potential upside. So that could be something where maybe, I don't know, maybe you've got like a ton of people who want help with AI, but you don't have any capability of fulfilling them. So then really you can just go out and buy any agency that can fulfill
Mm.
um, and it doesn't really matter about the size because you're going to be feeding business into them. So spinning that around to your audience who are probably on the selling side, and they might be thinking, well, do I need to get because it's not just about trying to grow your business as big as possible and sell it for the highest the possible amount. Like, I mean, it is, but it also isn't because some people burn out before they get to that stage, or some people might have another opportunity that they want to go for. And so they want to know, well, can I exit my agency now? Maybe it does have potential to grow, but they want to exit now. Because in my experience, most agency owners are first time or second time entrepreneurs. And so
Okay.
it's like a good first business. And then later on, a lot of people are like, actually, like, I'm kind of done with this. I want to move on to something else. And
Yeah.
so,
And that's good.
so
So we
yeah,
should point out for our listeners when Dom's talking about, 500 to $1 million, that's profit, that's EBITDA. So you're
correct.
generally buying these agencies in the 1.5 million to and beyond sale price. Like
Yeah.
you getting these on a 3 or 4 times that?
Yeah. Ideally. If we buy bigger businesses, the multiple tends to go up because
Go
again,
up.
they've got
Yep.
more of the good things about them. They might have more recurring revenue. So, well, let's talk about the things that get a higher multiple because
Yeah,
that will be really
let's look at
helpful
that. So I just want to point out for our
your
listeners
audience.
though, Dom buys up digital agencies typically over $1 million, typically over $2 million, but he has done that small one at 600,000 because it was opportunistic. Let's have a look at what is Dom looking for in these bigger agencies. What makes them more attractive? Because so Dom, just as you said, once the EBIT or the profit, we should use the word profit for our people that don't understand what EBIT is, just net profit. Once that gets quite high, the multiples go up. So this is where your wealth starts to accelerate. So if you're netting over $1 million, you're starting to look at a higher profitability. So let's hear it from you, Dom. What looks good for you with these bigger EBIT agencies? What makes them so good?
What I would pay a higher multiple for would be more recurring revenue.
Okay.
And there's kind of three within an agency. There's kind of like three. There's also a hybrid, which is reoccurring revenue. So it's like, recurring revenue is kind of like contracted monthly automatic payments. It might not be contracted, but contracted is even better. And then reoccurring is maybe like, yeah, someone comes back and hires you 3 times a year or something like that. And then, of course, you've got like the one-time payments. So it depends on what your business model is. So the more recurring the revenue is, the better. The more sustainable the business or the more stable it is, the better. So sometimes you have a business that's grown really quickly and someone's like, hey, this business made $1 million last year. I want 4 million for it. And I'm like, but the year before that, it made 100K. So I'm trying to figure out, we're not going to use 100K as the number because that's selling you short, but I am not comfortable paying it based on 1 million because I need to see that it's been 1 million for longer. like why did it grow so quickly, and is it sustainable? And that was really hard in 2023 because you had a lot of businesses that had just caught lightning in a bottle during COVID, and now they've been slowly declining ever since. And it's not necessarily that there's something wrong with the business, it's just that it's like a reversion to the mean. So sustainability of revenue and things is important. I would also look at concentration of revenue. Like if one client is responsible for a big chunk of it, that's a risk. I would look at the sales process. Is the founder doing the sales, or is there a sales team? Is the founder doing lead generation, or is there a lead generation team?
Mm.
Margins are important as well,
Okay.
although depending on the acquirer, margins could be more important or less important. Like, so for example, some people want to see, intuitively, you want to see businesses have a higher margin, but at the
Yeah.
same time, as an acquirer, let's say we know we can get a 45% gross margin on this service and your business has 35%, I might think, cool,
Yeah.
so I can find 10% growth after I buy it. Or I might think this is a below average business. So it kind of depends on the reasoning for the margin. But generally speaking, yeah, you want to try and improve your margins because it's rare someone will turn it away because the margin's too good. Um,
Yeah, that's
what
true.
else? If someone buys this, what are they going to do to grow it?
Mm.
And a lot of agency owners are doing everything, so they don't necessarily know what's working. You know, like you might be posting on LinkedIn, you might be running Facebook ads, you might be doing cold email outreach, you might be doing some local marketing. Like depends what your service is. You might be on like Clutch or some like what are the words, like marketplaces that list all the different services. And then you come in as a buyer and you're like, what's the opportunity to grow this? Do we spend more on Facebook ads? Do we post more on LinkedIn?
Yeah,
Do we go to more conferences? So having a real handle on what the actual like levers are for growth is pretty important.
that's a good point.
And surprisingly, most people don't actually know. Um,
And you've seen that even with bigger agencies. They like, is that something like once agencies
um,
get big, that problem would diminish.
Typically, in order to get bigger, you figured that question out.
Yeah.
So it's more like you can scale to 1 million in revenue, maybe even 2 million in revenue just through brute force.
Yep.
Um, and then
Yeah.
you stagnate and you're like, I don't know how to grow it. I've been trying to grow it for 2 years. I think I'm done. And so for us, that can be an opportunity if we're able to come in and be like, well, what is missing? But yeah, that's typically where a lot of people stall. So I think that's another reason why slightly bigger businesses get a higher multiple because they figured that
They
out.
figured that
Now,
out.
that being said, if you do figure that out, you might not want to sell because if you figure that out, you're probably on a rocket ship and you can just keep
Yeah.
growing. So,
So really, an
yeah,
automated business too. Like obviously, behind all that, you're looking at the. You've mentioned it a few times now. The owner's involvement, like you said, most of these agencies you see, the owner's typically doing everything to grow it to where it is. When you get bigger, you're looking for ones where ideally the owner isn't doing everything. They've figured stuff out. So they've got teams in place or automations in place or they know where the
it's
leads
more
are
of a
coming.
risk. Yeah, yeah. Every buyer is different. It depends on their philosophy, if they're centralized, if they're going to run the business themselves, or if they're going to have to hire someone to replace the founder. But like, I'll tell you an example of a business I wouldn't buy is like
Okay.
someone has a good social media profile, could be LinkedIn, Twitter, it doesn't really matter. And
Yeah.
then they started selling a service on that profile, and then that's basically the business. And they'll argue like, oh, my team does all the work. I don't really do anything. I just post 3 times a week on social. And basically, like, that's actually a really difficult business to buy because unless they're coming with it, that's actually all the business is. It's like a social media account and a spreadsheet, basically is the business. And so if you have that business, no offense, it can actually be a great business to run. Um, you only have to post on social media 3 times a week and you get sales, but it's a really difficult business to buy. So
Okay. That's
unless you buy the person as well, like
where have you seen mistakes made with agency owners? Like what what things have devalued agencies that you've looked at? Because you see a lot of deals, and keeping in mind you are a big buyer. You're not buying small little agencies. We're now talking buying the multi-million-dollar ones. What mistakes have people made, do you think, or owners of those have made when it comes
Yeah.
to
Well,
exiting?
we have bought smaller ones as well, so I mean, maybe the mistakes are the reason we don't buy smaller ones anymore. But some of it's just the inverse of everything I just said. So like too
Yeah.
much client concentration, too much
Yep.
founder reliance. But the books actually can be a frustrating one. So
Oh,
um,
yeah.
some businesses have a lot of deferred revenue. Maybe um, it's a
Um,
problem we encountered with our most recent acquisition actually.
yep.
They might sell a project for 150K all up front, but it's a 6 month project, and so technically we might be like, oh hey, this business made 150K this month, but it turns out, well no, actually it kind of was break even
Yeah.
because you're going to be fulfilling that work over the next 6 months, and not getting paid for it. And as long as you always have more sales coming in and more revenue coming in, it actually, like, at some point all of that deferred revenue catches up and you are profitable. But that's a bit of a problem, is sometimes an agency will have a cash crunch. And the reason a lot of agency owners sell, and they don't really say this, and they maybe don't even know this, but they're looking for a liquidity backstop. So they have these months, like what I was talking about when I was in Germany and I was worried
Yeah.
about payroll. They have months where they're like, how am I going to pay anybody this month? So
Yep.
having like a public company, or just it could be a private company, but having like a parent company above you, um, to be like, yeah, like, here's 100K if you need it for the next 3 months or something. That's actually really appealing. And for us, we're okay doing that, but we're like, can we get it back in month four?
Yeah. Yeah.
Um, and so, and actually, that is an opportunity for someone who wants to sell and stay on,
Hmm.
is that sometimes actually that liquidity backstop is the difference, because people are willing to invest more in growth when they know, like, if we do have a rough month, my the corporate owners will help with payroll. And so for us, we don't really want that to happen. But
And it's really handy for our listeners to understand this because there is lots of ways there can be cash buyouts. And you mentioned a lot of founders want to move on, but have you bought businesses through Onfolio, particularly agencies, where the founders stay on? Like, how do you typically structure most? Like, do
yeah,
most
we've
founders move on, or
done
do some stay, or do they stay with you and share the upside,
both.
presumably?
Yeah. We've done two where the founder stayed on, and
Oh
in
yeah.
both those cases, it was more than one founder.
Okay.
So with one, it was three founders, they all stayed on, and with another, it was like a founder and the kind of C-suite. And the founder and the I say C-suite, but it's like a small business, so they're not really,
Yep.
they're like CEO, CMO, COO, but
Yep.
they're
Key
like
player.
really,
Yeah.
yeah. I think they all owned equity. The founder owned the most, and the others owned like small percentages, but they all stayed on and they all rolled equity. The founder did kind of move on and do do other things.
Yep.
But A, he was clear about that, and B, he still helps out with social media posts from time to time, and there was already someone running the business anyway. So we felt like, well,
Gotcha.
we're not transitioning from you running it to someone else running it. We're just transitioning it from you owning it to us owning it. But the person running it is going to stay. So the vast majority, though, people want to move on, because
Okay.
that's why a lot of people sell. They're tired. They're not sure how to grow it. Maybe they're good 0 to 1 people, but not 1 to 10 or whatever. So yeah, we're okay with that, as long as, like, some of the other things we've spoken about are true. Like, the is
Yeah, I
there a
think
pipeline that exists without the founder?
yeah, that's really good to hear because in our community, obviously, you mentioned something really interesting. Digital agencies are a really good first business, and they're really good to get someone to their first mill, like what's happened with you multiple times. And I guess there is a good opportunity for someone like that. Yeah, they can just sell out and move on. But I was just wondering what, in my background when I was involved in M&A, we saw so many really good success stories where founders stayed on with a company like you when they came in as an acquirer, and they'd say my personal mentor used to say to me, Matt, it's the best outcome ever because you as the entrepreneur get to have a cash out moment, like you were calling it a liquidity moment, and then you get to share the upside if the big corporate keeps growing you. And I would think that's going to be something that will be really popular. Like, is that a preferred outcome for you if you did find the right founder?
Yeah. Um, Everything's easier if I mean I would say so the key there is like find the right founder. Yeah, I think also find the right business.
Oh, good
Some
point.
founders it's better if they get out of the way because maybe they
Yeah.
have mental blockers or
Yep.
like they've got limiting beliefs or something like that, and it's like
Interesting.
but typically the founder's going to be the best salesperson for the business. They're going to be the
Yeah.
best account manager for the business. They're going to be the best, potentially the best innovator as well, like thinking about delivering new services. They're going to
Mhm.
be the one that's closest to the clients and is going to be able to see, hey, we need to pivot or we need to add a new offering. Like, hey, all of our clients are suddenly wanting this thing and our competitors are offering it and we should do that. That's always going to come from either the founder or from someone who's kind of living and breathing the business. And so,
Yeah.
in an ideal world, the founder will stay, they'll retain some equity, 10%, 15%,
Yep.
20. It doesn't actually really matter because it's quite a
Yep.
small size at that point. But and then what you're adding in is maybe connections, knowledge, um,
And funding,
and
like you said.
cash.
Yeah,
Yeah.
cash, basically. Well, like you said, it does mindset-wise, it makes a huge difference to a founder who knows they can just comfortably step on the accelerator and they've got a big corporate like yourself behind them to grow it. It's just it is an interesting space. I've seen it work really here in Australia, in where I used to specialize in selling manufacturing and wholesale import businesses, and used to see it quite a bit. We'd have private equity come to us and say, we want the founders to stay on and we'll make them very successful. We'll fund everything, but we need the right kind of, they're always looking for the right person though. It had to be the right founder.
Yeah, I think for the founder, the idea there's a book actually by I think Adam Coffey, is that it? Called I think it's just called Private Equity or the Private Equity Handbook or something like
Yeah, I
that.
think I've heard
And
of
it's
that one.
actually
Yeah.
written more from the perspective of a business owner, and it's about like why you should sell to private equity. And obviously, he wrote this probably as a book to give to founders to persuade them
Yeah.
to sell to him.
Yeah.
But the basic idea is like um, you might sell your business for $1 million and retain 10%. But then if everything goes well, you'll sell, private equity will flip the business in 10 years for $100 million. So your 10% is going to be worth more than the entire thing. That's like the basic way it works. We haven't done that and we can replicate that without flipping the business because we can give them stock options in Onfolio. But
Yeah.
yeah, that's the kind of thesis behind why a founder would stay. And also, some founders enjoy the business. They want to keep collecting their
Yeah.
salary and they want to grow it and they're not worried about giving up equity. Like it really, a lot of people think, why would you do that? But I think it
Oh,
depends on the mindset of the founder, why they're in business. A lot of people are in business because they can't work for other people. So they're not
yeah.
a good fit for that model. They should just sell and move on.
Yeah.
So, it just depends on the goals and the quality and the criteria, I think.
So Dom, are you actively out there looking now for agencies? Where are you guys at with Onfolio?
Yeah, we are. We at the moment we're in like the phase where we're trying to raise more capital, and so once we've refilled the coffers, then it's a lot easier for us to go out and be more active buying. But we'll still take a look at agencies because it's always good if you're an agency owner to think about selling before you want to sell as well.
Sure. Okay.
So
So if someone's listening to this podcast, do you go only through brokers or can people approach Onfolio directly?
We will do everything. Like we do work with brokers. Brokers have a lot of advantages, but we
They
also
do.
will work directly with someone. People reach out to us, we reach out to them,
Okay.
introductions. So, anything's fine. People can
So if
just
you're listening to this, here's a
visit the
suggestion. If you're
website.
listening to this, you can either contact me here at eBusiness Institute, and I'm happy to put you in contact with Dom. You've got to have a decent agency. Or where else can they just go? If they don't want to go through me, if they don't want the personal intro, can they just go onto onfolio.com, I'm presuming? Is there a contact page? Is that how most people
Exactly, yeah.
approach you?
There's a kind of like there's a get an offer page as well.
Dom, I want to say a big thank you so much for coming on the Digital Investors podcast today and sharing your insights into buying digital agencies. But also, I want to say a big congratulations, mate. Starting out like most of our listeners all those years ago to now owning a NASDAQ listed tech company, buying and selling digital agencies or all sorts of online businesses. Well done. In such a short amount of time, too. Impressive story there. So well done. And
Thank you.
looking forward to having you on again later in the year.